Hey everybody, this is the panel called What Investors Want to See in Your Games Company. So I'm joined today by two top early stage venture capital managers, Salone Sehgal from Lumikai Fund and Michael Cheung from Makers Fund. I'm going to first introduce the topic and myself, and then I'll let the panelists here talk about themselves and give a short introduction. So we're going to cover a lot of topics for gaming founders who are thinking about raising investor money, venture capital, cash. So what is it? How do you manage to raise funding? What is required? Like what's going on in the market right now? We're going to explore a lot of topics. Well, like first off, an introduction from myself. I'm Joakim Achren, founder of Elite Game Developers, which is a blog and podcast and a resource online for founders who are building games companies. Included, I'm also doing angel investing, working with a lot of founders. So if you want to talk with me, hit me up on LinkedIn anytime. Happy to have a chat. Then let's go and introduce the panelists. Salone, why don't you go first?
Hi guys, I'm Salone Sehgal. I'm currently the general partner at Lumikai. We are India's first early stage interactive media fund. In my career, I've been fortunate to see the industry from all sides of the table, like I call it, as an investor, entrepreneur, and M&A banker. Prior to Lumikai, I used to be with London Venture Partners, a leading European gaming VC. Before I transitioned to LVP, I was the CEO and co-founder of Truly Social, which was a venture-backed gaming studio building immersive social world games for female audiences. And I spent the first 7 to 8 years of my career in investment banking and private equity as well, with Morgan Stanley, Barclays, Good Energies, with over $10 billion of M&A experience. So very happy to be here.
Great. Michael,
all right,
you want to hit it off?
Hi, everyone. Thank you. Yes, hi, everyone. I'm Michael Cheung. I'm a general partner at Makers Fund. So I'm a data scientist by training. I've advised and helped gaming media companies in scaling revenue across Asia, EMEA, and the US. I spent some time at Tencent, and then back in 2017, I helped to found Makers Fund together with my partner, Jay Chi. And since then, we're a Series A, seed and B focused fund. We've invested in about 60 companies in the gaming sector across about 16 different cities globally. And yeah, we invest in everything from studios to platforms and technology.
Thanks for that introduction. I'm going to hit you off with the first question. There's like you're looking at hundreds of companies every year. What's been sort of like the most effective from the founder's perspective, first messages, those outreaches, to get to those first meetings and to proceed from there? Do you have any feedback there for founders, how to reach investors?
Sure. So actually, contrary to maybe the more common advice, I think whilst like a warm introduction is always great, and if you can get one, I would always go for it. We're kind of in this like COVID world now where it's a lot harder to like serendipitously meet someone and bump into them, on the way from A to B, right? So I found that I'm actually really open now to kind of LinkedIn messages, like cold LinkedIn messages, sometimes even cold emails, but with one really important caveat, which is to be really clear and concise in your message, right? So basically, my advice is, if you don't know anyone in the industry, that's completely fine, right? Find, look at someone on LinkedIn, find a email for somewhere, wherever, and in your message, just write very simply, what is your background? What are you trying to do? What's the problem you're solving? What are you effectively aiming to do? And why you would want to talk to us? Right? And it could be, it might not be fundraising, right? It could just be, hey, can I have some advice? I really want to understand more about, the investment industry because I would like to fundraise, not now, but in the future. And I think you'll be surprised how many people will actually respond if you're kind of clear and sincere in the message. I would certainly avoid any kind of double thinking around trying to say, hey, we've got this really fast thing and I'm trying to close something in 7 days. I think most of us are in this COVID world, post-COVID world, long enough now to just really appreciate conciseness. So that's really my kind of number one tip right now.
Yeah, how about you, Salone?
Yeah, I think that's a really great question, because that hits right to the point of deal sourcing, right? And as Michael very articulately put it forward, is that whenever we were so used to warm approaches, now in this new world, and also as Lumikai is a new fund, we're actively encouraging cold approaches, to be honest, because again, goes back a little bit to my experience, is that venture capital is sometimes tends to be insular. And while we're all maximizing for outlier success, the biggest obstacle to that is often this affinity to warm intros and dependency on referrals, which crowds out diverse talent or people who are not actively well networked in the industry. So we encourage founders to write into us all the time. Typically, well-drafted emails, which are precise and incisive, work very well. So short intro, 1 or 2 liners on the opportunity, on the team, the proposition with a deck is helpful. Bonus marks if they've researched us well and can indicate maybe to a time where we may have talked about the opportunity that the founder is perhaps building. But that being said, I totally agree with Michael, is that sometimes a very earnest, authentic email also often catches your eye and will prompt a response. So, just an anecdote, we received this wonderful email from a 14-year-old who wanted to set up her own game dev studio, right? And it was so great to see that enthusiasm and that raw courage to even send a VC a pitch that, both me and Justin, my co-GP, we both responded to that email. So I think there has to be that level of brevity, that authenticity in that email as well, which will help catch your eye. I think the worst approaches are either rambling, incoherent, poorly researched, or I desperately need your money appeals, which typically tend to get dinged.
Yeah, those are really, really good examples. Then thinking about the whole industry kind of like blowing up last year, and it's continuing, like all these big deals happening with VC, M&A, and IPOs. How do you see that affecting the early stage investing? Michael, do you want to go first on this?
Yeah, so I think for our industry, there really is it's an amazing time to be a founder. I think we're in this place where there is this great attention to our industry, and raising is definitely a lot less challenging than it was even like 24 months ago. So I think that's kind of really positive for founders. Now, however, from the founder's perspective, I think it has somewhat increased the importance of doing research on who you're really going to be working with, right? And I think that I'm going to focus more on the VC side first. I think it's really important that who you work with, what's their background, what have they done in the past, how have other founders found it working with them. And I think this is pretty much like classic advice, regardless of what sector you're working with, right? Always research your partners in advance, and especially if they're investors. So I think that's the first most important thing. Where I've also seen it really matter is now with all the M&A and IPOs, what we're seeing is companies are getting approached earlier than ever to exit, right, and be acquired or list. Obviously, for companies that are in that kind of mode of IPO or not, I think that's a kind of like a good problem. And right now, everyone's trying to IPO, right? But that will also simply increase the pressure on the M&A market. And so what we're seeing is a lot of studios which are seeing the early signs of success are now getting approached by strategics, getting approached by private equity funds for buyouts. And so you're going to get this really interesting next 12, 24 months where a lot of the founders who are on that perfect path have that existential kind of question of, hey, do I stay the course and go shoot for the moon, or do I pocket, exit my company and pocket $50 million, right? And don't get me wrong, for 90% of founders, that is an amazing exit, and it is a fantastic exit. But it's an interesting dilemma.
It is. It is. Salone, your thoughts there?
Yeah, so very similar to what Michael said. There's obviously a pro and a con, right? There's obviously a lot more attention now being paid in the sector. Gaming is no longer on the fringes of tech, but it's now mainstream, and more people, especially funds and the broader investing, private equity, growth equity sector, are now paying attention to the power of this new next generation medium of entertainment, which is only a good thing. I think particularly how it impacts early stage investing is that there are a couple of factors, right, which are impacting on the fund side and then a little bit on the founder side. On the fund side, you have speed of deployment across funds has increased, right? So funds are doing a lot more deals in a particular year, either spurred by competition or its general optimism, but this is often characteristic of boom cycles. So funds are also being thus raised faster, which means more capital is being deployed in the sector, implying more liquidity. Now, the con of that typically is there's some degree of overheating. So you've got capital chasing the same companies, or to some extent, valuation inflation, right? Which I believe hurts companies and investors all in the long run. It also may mean that sometimes companies are getting funded that don't necessarily deserve to get funded, especially at the super early stage, right? But on the good side, we have seen, markets are at an all-time high. There is now a new crop of cash-rich buyers with massive war chests, which means that range of 200 million to a billion M&A outcomes are becoming more likely, increasingly actually to the benefit of early stage investors and founders that Michael just touched upon. And so there's a positive and a negative to it, right? But we're definitely in a boom cycle at the moment.
Do either of you feel it's like the work from home, kind of like everybody's at home lockdown pandemic, if that goes away and it causes kind of like numbers to go backwards and there's a decline for the first time in a few years, like how do you see that making any difference in the market? Will there be a difference? What do you think? Like, Salone, do you want to take this first?
Sure. I think Michael is much better placed to provide a global perspective. I'm very happy to provide a perspective from the India market, which I believe is going to be a transformative market in the next decade. So for India, the pandemic saw digital acceleration, which has brought forward to some extent India's technological revolution by 4 or 5 years. So you now already have a market with 650 million internet users, 350 million smartphone users consuming 9 gig of data a month, primarily for video content and gaming, right? Indians, for the first time, became the biggest consumers of games in the world, beating US and China last year. This is because COVID created a systematic change. Data usage went up, broadband ISP connections increased 150%, millions of people were brought online, some for the very first time, and I don't believe that behavior is going to go away after the pandemic, right? And if you couple that with what's happening on the sociological front, on the social front, is that there is a state of what we're calling and seeing of digital decolonization happening in India, where more and more Indians are reclaiming their digital identities, and they're talking about India first games, India first apps and products. And there is almost an increasing desire to decouple from the West. And this is why, in my view, the India story is a little bit divorced from the rest of the world, where I believe this growth spurt that we've seen is a systemic shift and not just a short-term boost.
Yeah, Michael, your thoughts?
So actually, I think that your answer applies to the rest of the world, Salone, except the only difference is the reasons are a little bit different. First of all, this is a question that I have seen every single time a company that has ridden the wave of success. So normally they're not in early stage, they may be in like early growth or scaling phase, right? So they have revenues, The pandemic happened, the revenue spiked, and everything suddenly looks great. And every single investor, regardless of the company, is asking the same question, which is it all going to go back once COVID ends? And my advice is the answer to this is what I recommend like every single founder to say is say, you know what, the behavior is ingrained. What is the essential motive of what game designers are trying to do? It's to create engagement, it's to create retention, it's to create habit forming titles that retain you for years, right? And of course, I'm probably overgeneralizing in the kind of venture backable game studio space, right? But nonetheless, that is the ultimate goal. And so what everyone has essentially gained in the last 12 months is a hyper engaged audience at a bigger scale than they ever could have gotten before, who have hopefully, if you've done your job properly, created a habit. So even when COVID ends, yes, there will be a correction, but in every single company, platform, studio I've seen at scale, that has simply created a new high watermark in revenue, right? And in user engagement. So, I'm not so much in the doom and gloom. I'm kind of quite optimistic about post-COVID. I think the real question is like, what is that correction, right? What is that percentage? And it's certainly not going to be a huge dive.
Yeah, I feel the same way as you guys. So it's interesting to see like the slope, if there's a slope coming, but we'll see how it goes. I have a final question for you, for both of you. What is the one piece of advice that you'd like to share with the founders in the audience who are planning to fundraise in the near future? Michael, do you want to go first?
Yeah, my advice is, especially now in this world where you can't really meet people in person, and investors have to invest without meeting people, my really strong advice is to invest in meeting multiple investors ahead of your fundraise. So think a few months out, meet people, be very kind of transparent and clear on your intention. Say, hey, look, we're not fundraising right now. We're planning just to have a chat. And we just want to kind of get to know both sides. I think this will help make the decision easier on both sides, right? Not only will the investor feel more comfortable about the kind of company, but the background and the personality of the founders, but more importantly, the founders get a chance to understand the kind of psyche, understanding the prioritizations, reputation, and the history also of the investor. And by doing that, I mean, you're really making that decision of who you're partnering with for the next kind of 7 to 10 years a lot easier, rather than having to rush who you're going to essentially marry in 14 days, right, or 21 days. So that's really my advice to every single founder out there now. And yeah,
that's a good one. Yeah, Salone, you want to give your thoughts?
Yeah, I think, I think that's some great advice from Michael. I think from my perspective, because we back super early stage founders, I think, there are 2 to 3 key pieces of advice that we give founders whenever we speak to them. The first is really introspect to identify if you are a venture scale business or not, especially for game devs. They really need to distinguish if they need a VC or a strategic publisher or a project financer, because your approach for each will differ. And they're not all mutually exclusive, but it's best to have clarity if you want to get on board that venture capital treadmill, which it is. So it's best to know upfront. I think the second is, especially at the super early stage, be realistic and do the math at that stage and work backwards, because your ability to calculate how much runway you need to achieve product market fit, now whether it's 14 months, 18 months, or 24 months, that's super critical. And the milestones you need to achieve to be able to demonstrate valuation growth and your next round financing is going to be super critical, right? So if you're raising a seed round at 20 million, where do you think your product or your company needs to be to at least achieve a valuation 3x that in the next round? And is that possible? Is that even achievable? And I think most of the early stage founders that we meet, especially in the market that we're operating in, there is a tendency to underestimating funding needs and overestimating ability to deliver and execute. And I believe second-time founders do a much better job of this than the first-time founders, who tend to be more detached and objective, and the first-time founders are much more optimistic. But that's super important, especially at the very early stage. And I think the last piece of advice is, gaming is incredibly competitive. If you're embarking down this path of being VC backed, really inquire within yourself and your team if you have a superpower or a secret sauce or a certain technical skill set or a white space that can set you and your company aside from everything that is being built globally. And that's super essential to really stand out and then be venture backable.
Really good advice from both of you. I think we're going to be wrapping it up now. So if anybody wants to reach out to you, I think all of us are taking LinkedIn cold messages nowadays. So go for it. And yeah, see you out there, people. Bye-bye.
Thank you.
Thank you.